Gilead Sciences, Inc. The biopharmaceutical company, Biktarvy, generates over $3 billion per quarter, anchoring the world's dominant HIV franchise, while the company bets on CAR-T therapy and antibody-drug conjugates.
GILD generated $29.4 billion in FY 2025 revenue at 87% non-GAAP gross margin. The oncology pivot through Trodelvy and Arcellx is the defining strategic bet of Daniel O'Day's tenure.
Michael Riordan founded Gilead Sciences in Foster City in 1987, initially called Oligogen. The 1992 NASDAQ IPO launched an antiviral pipeline that would redefine HIV and hepatitis C treatment globally.
The 2011 Pharmasset acquisition for $11 billion gained sofosbuvir, the molecule behind Sovaldi and Harvoni, which cured hepatitis C and generated peak revenues of over $19 billion.
In 2017, Gilead acquired Kite Pharma for $11.9 billion, gaining Yescarta, the first FDA-approved CAR-T for B-cell lymphoma. O'Day joined as CEO in 2019 and doubled down on oncology.
HIV dominates revenue at 72%, led by Biktarvy, Descovy, and Odefsey. Oncology contributes 12% through Trodelvy, Yescarta, and Tecartus. Liver disease and Veklury complete the portfolio.
Biktarvy alone generated $3.4 billion in Q1 2026. A single drug, a single quarter. Descovy grew 38% year-over-year as an HIV prevention agent, extending the franchise's long-term durability.
FY 2025 revenue of $29.4 billion grew 2.4%. Non-GAAP gross margin reached 87%. Operating cash flow of $10 billion funds the aggressive oncology M&A pivot.
Q1 2026, non-GAAP EPS of 203 beat the 191 estimate. Revenue grew 4.4% to $6.96 billion. Trodelvy surged 37%. Livdelzi more than tripled year-over-year.
AbbVie, via VIV Healthcare, is Gilead's primary HIV competitor, with Cabenuva's long-acting injectable gaining market share. GSK also holds a VV stake, competing directly against lenacapavir and Biktarvy.
In oncology, AstraZeneca's Enhertu competes against Trodelvy in breast cancer. Bristol Myers Abecma and Breyanzi target the same B-cell lymphoma and multiple myeloma patients as Gilead's Yescarta and Tecartus.
Gilead's moat is Biktarvy's resistance barrier, used by over 70% of treatment-naive HIV patients globally. Switching HIV regimens risks resistance mutations, creating extraordinary franchise stickiness.
Gilead operates in over 35 countries. The U.S. generates 63% of product revenue. Europe and Japan are major HIV markets. Lenacapavir access programs reach 100 low-income countries.
Lenacapavir gained FDA priority review for a once-daily combination targeting treatment-naive HIV patients. PDUFA August 2026. A potential new blockbuster built from the same franchise that created Biktarvy.
Daniel O'Day joined Gilead.
O'Day holds a Georgetown BA in biology and a Columbia MBA. His Arcellx acquisition for $7.8 billion bets on anito-cel CAR-T for multiple myeloma, with a PDUFA decision in December 2026.
Gilead Sciences, the biopharmaceutical company, $29.4 billion in FY 2025 revenue, led by Biktarvy's dominant HIV franchise and a bold oncology pivot through Trodelvy and the Arcellx acquisition.
Q1 2026, non-GAAP EPS of 203 beat the 191 estimate. Revenue grew 4.4% to $6.96 billion, HIV up 10%, Trodelvy up 37%. Full-year guidance raised to $30.2 billion.
Gilead Sciences reported Q1 2026 revenue of $6.96 billion, up 4.4% year-over-year, beating the estimate. HIV sales surged 10% to $5 billion. Non-GAAP EPS of $2.03 beat the 191 estimate by 6%. Management raised full-year guidance by $400 million. And the bigger story, lenacapavir is redefining what HIV prevention can look like. Near-perfect trial efficacy and $1 billion in first-year guidance.
Gilead Sciences was founded in 1987 in Foster City, California, and built its reputation on antiviral science, HIV, hepatitis C, and COVID-19. The company became the dominant force in HIV treatment through Biktarvy, commanding over 52% of the U.S. market. The COVID antiviral Veklury peaked at over $3 billion annually, but is now in rapid structural decline.
Gilead is executing two pivots simultaneously. The lenacapavir HIV prevention supercycle, a long-acting capsid inhibitor with near-perfect prevention efficacy in the PURPOSE trials, already approved for twice-yearly injection and now under FDA review as a once-daily oral pill, and an oncology build-out through Trodelvy in triple-negative breast cancer and CAR-T therapies Yescarta and Tecartus. CEO Daniel O'Day came from Roche in 2019 specifically to lead this transformation.
Q1 2026 revenue of $6.96 billion beat the $6.86 billion estimate by 1.5%. HIV total was $5.03 billion, up 10% year-over-year. Biktarvy alone delivered $3.36 billion, up 7%. The PrEP drug Descovy surged to $807 million, up 38%. Trodelvy hit $402 million, up 37%. Cell therapy was $407 million, and Veklury declined 52% to just $144 million as COVID hospitalizations normalized.
Non-GAAP gross margin reached 87.5%, 200 basis points above the prior year, driven by the expiration of the TAF royalty obligation. Non-GAAP operating margin hit 46.9%, up from 43.4% a year ago. Non-GAAP EPS of $2.03 was up 12% year-over-year. Gilead raised full-year product sales guidance to $30 billion to $30.4 billion and raised Yeztugo revenue guidance to $1 billion, blockbuster territory in year one for the HIV prevention injectable.
Daniel O'Day.
Wall Street has 18 buy ratings, 8 holds, and 1 sell. Average price target is $158, 21% upside from the post-earnings $130. Leerink raised its target to $146. Truist maintained buy at $145. Morgan Stanley reaffirmed overweight at $160. The stock fell 2.7% post-earnings on the $11.5 billion IPR&D charge headline, a reaction that masked a strong base business beat of 8% growth.
The lenacapavir data is the centerpiece of every bull case. In the PURPOSE 1 and 2 trials, near 100% of lenacapavir recipients did not acquire HIV, so striking that the trials were unblinded early to give the control group access. Yeztugo, the twice-yearly injectable, is on track for $1 billion in 2026 sales. Bic/Len, the once-daily oral combination, is under FDA priority review with an August 27th PDUFA date. Leerink models lenacapavir generating $8 to $10 billion in peak annual revenue across treatment and prevention.
The bull case on Gilead is structural. Lenacapavir is a capsid inhibitor, a completely different mechanism from existing HIV drugs, enabling long-acting dosing that nucleotide-based regimens cannot match. PURPOSE trial efficacy was near perfect in a large randomized study across multiple geographies and demographics. If Bic/Len is approved in August and Yeztugo captures 15% of the 30 million globally eligible PrEP candidates, lenacapavir becomes a $10 billion franchise within 5 years.
The Trodelvy catalyst is underappreciated in the bull case. FDA is reviewing Trodelvy for first-line metastatic triple-negative breast cancer with a decision expected in H2 2026. Current revenue of $1.6 billion covers second-line patients only. First-line approval expands the patient population 3 to 5 times, potentially lifting Trodelvy toward $3 to $4 billion annually by 2028. Combined with the TAF royalty expiration adding 200 basis points of permanent gross margin, Gilead's free cash flow compounding is accelerating.
The bear case begins with Veklury, declining 52% to $144 million in Q1 and only $600 million guided for the full year. It is dragging headline revenue growth to 4.4% despite the 10% HIV surge. If COVID hospitalization rates stay low and Veklury fails to recover, Gilead's total revenue growth continues to look modest relative to its valuation premium over other large-cap pharma names.
Biktarvy's patent expiration is the existential risk on a longer horizon. Composition of matter patents expire in the early to mid-2030s. Generic entry would eliminate $12 to $14 billion in annual revenue rapidly, similar to Humira biosimilars but potentially faster in HIV, where payers have been aggressive in switching patients. The Bic/Len approval and Yeztugo launch are Gilead's answer, but the transition must execute flawlessly over 7 years.
Oncology competition is intensifying on two fronts. AstraZeneca's Dato-DXd antibody-drug conjugate is competing directly with Trodelvy in metastatic breast cancer. In CAR-T, Yescarta faces competition from Bristol Myers Squibb's Breyanzi. The Arcellx acquisition adds anito-cel with a December 2026 regulatory decision, but that is still a year from revenue contribution. The M&A strategy is validated by Trodelvy, but carries meaningful execution risk across 3 simultaneous clinical stage programs.
In the large-cap biopharma peer comparison, Gilead versus AbbVie. AbbVie trades at 17.8 times forward earnings with a 3.4% yield, a direct comparator as a high-yield pharma compounder navigating its own post-blockbuster transition. AbbVie's Skyrizi and Rinvoq are growing at 53%. Gilead's HIV is growing at 10%. But Gilead's lenacapavir optionality, a once-per-year HIV prevention drug with near-perfect efficacy, is an unpriced upside scenario with no AbbVie equivalent.
Bristol Myers Squibb is the patent cliff comparison, trading at a steep discount at 2.9 times price to sales. BMS's immuno-oncology depth exceeds Gilead's, but Gilead's HIV franchise generates more durable recurring revenue than any BMS asset. Moderna is the antiviral comparison, also post-COVID revenue collapse, loss-making, with no recurring franchise underneath. Gilead's HIV machine, generating $5 billion per quarter, makes it structurally superior for income investors seeking pharmaceutical durability.
Versus Moderna. Moderna trades at 4.1 times sales, is loss-making, and has no prescription franchise generating recurring revenue. Gilead generates $10 billion in annual free cash flow and pays a 3.9% dividend. Both companies built massive COVID revenue that is now declining. But Gilead's HIV base is mission-critical therapy, not a discretionary vaccine that patients skip when risk perceptions normalize. The risk-adjusted return differential is substantial.
Pre-earnings options positioning showed a put-call ratio near 0.72, moderately bullish, reflecting confidence in the HIV franchise. Post-earnings call volume built in the 140 and 150 strikes for August expiry, targeting the BLEN FDA decision on August 27th. Sophisticated investors stayed constructive after the post-earnings decline. The options market is treating August as a binary catalyst with substantial upside if the combination pill is approved.
Gilead returned approximately $2 billion in Q1 alone, $1.4 billion in dividends, and $600 million in buybacks. The annual dividend of $5.04 yields 3.9%. The company has increased its dividend every year since 2015, and the TAF royalty expiration adds incremental free cash flow supporting continued growth. With $9.8 billion in trailing free cash flow, the dividend is covered at more than 2 times exceptional durability in a volatile sector.
The M&A tension, $11.5 billion in 2026 acquisitions, all clinical stage, all 3 to 5 years from revenue. The Trodelvy precedent validates the strategy, a $21 billion acquisition now generating $1.6 billion annually. Buyback authorization of $3 billion for 2026 at $130 per share retires approximately 1.8% of shares. Combined with the dividend, total shareholder yield is approximately 5.5%.
Gilead at 15 times forward earnings, excluding M&A charges, is at the low end of its historical range. HIV growing at 10%, Trodelvy at 37%, Descovy at 38%, non-GAAP operating margin expanding toward 50%. Lenacapavir peak revenue of $8 to $10 billion, if it executes on purpose data, could double Gilead's earnings power by 2030, an unpriced option embedded in a stock already yielding 4%.
Watch 3 catalysts in the next 12 months. 1. BLEN FDA decision on August 27th. Approval unlocks a next-generation HIV treatment and extends the lenacapavir runway. 2. Trodelvy first-line breast cancer decision in H2 2026. Triples the patient population. 3. Anito-cel CAR-T decision in December 2026. Arcellx's best-in-class BCMA asset. 3 decisions in 8 months. Any one of them can re-rate the stock materially.
Gilead delivered 8% base business growth, a 6% EPS beat, and a $400 million guidance raise. HIV is accelerating. Lenacapavir prevention is real with near-perfect trial data. Trodelvy is growing at 37%. At 15 forward earnings with a 4% yield, This is value plus optionality in biopharma. The risks, Veklury decline, Biktarvy patent clock, M&A integration, are real and priced into the discount. Watch August.
HIV cash flow funding a lenacapavir prevention supercycle, a 4% dividend growing every year. Trodelvy and CAR-T rebuilding oncology. At 15 forward earnings ex charges and a 3.9% yield, the base case is income with pharmaceutical-grade durability. The upside case is lenacapavir becoming the defining HIV prevention drug of the next decade. 3 binary catalysts before year-end. August 27th starts the clock.
Risks are real. Veklury declining fast, Biktarvy patent timeline, $11 billion in front-loaded M&A. But at current valuations, the market is pricing none of the lenacapavir upside and all of the near-term headwinds. For investors comfortable with binary FDA events, the asymmetry is favorable. The dividend provides a floor while the pipeline provides the ceiling. That combination is rare in large-cap biopharma.
Key metrics to watch. Biktarvy quarterly revenue must sustain above $3.2 billion. Yeztugo prevention sales tracking toward $1 billion. Bik-Len August FDA decision. Trodelvy H2 breast cancer label expansion. Non-GAAP EPS ex M&A charges targeting $8.65 to $8.85 for full year. Free cash flow coverage of the dividend. Target 2 times or above. Watch these 5.
Financial data and charts sourced from Financial Modeling Prep and Gilead Sciences press releases. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making any investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.